Good morning, Happy New Year, and welcome back to another East Capital webinar. For those of you who don't know me, my name is Massimo, and I am part of the Investor Relations team. Today we are joined by East Capital's partner, Chief Sustainability Officer, and co-founder Karine Hirn, alongside Dmitriy Vlasov, Senior Portfolio Advisor to East Capital Strategies. Now, over approximately the next 20 minutes, Karine and Dmitry, who are based out of our Hong Kong office, will share insight on China's reopening and what this means moving forward. So let's dive right in. Karine, you recently attended a conference hosted by a global investment bank. Can you share a little bit what investor sentiment was like?
Yes, so good day, Massimo, and good day to everyone. Yes, it was very, very bullish. So I think there are actually four reasons for that. The first one is clearly the reopening of China related to COVID policies. And of course, we will be discussing that further today, but this reopening is much faster than anyone had anticipated, and it has consequences on Chinese growth this year, consumption, investments, and so forth. And again, we will be probably discussing this much further in details with Dmitry in terms as well of the implications for portfolio investors. Another reason is, which maybe people outside of China or people who don't spend their time like we do monitoring China are not aware of, is the number of measures that have been taken now to help and stimulate the property sector, which is extremely important to the Chinese economy. So basically, you can say that property policies have turned around, more supportive for home buyers. There's also better financing terms for real estate developers, and that means that the property sector should not be a drag anymore in the way it has been during the last years. And here again, I'm sure Dmitry will be commenting, because it's a sector in which he's been investing and following very, very closely for many years. Already. So a third reason is that there have been some headwinds in China, which seems to have taken maybe not completely ended, but taking a pause. Some of them are related to, for instance, the big tech, the big companies in China, where they've been definitely under the scope of the regulators, and it seems now that there's a much more positive sentiment towards this sector. But also, for instance, related to the audit issues of Chinese companies that were listed in the US, also very important. And the last and fourth reason is related to geopolitics. Geopolitics have been very tense. I'm not saying that we don't have any geopolitical issues anymore, for sure, but right now, especially related to the China-US relationship, we have a situation where things have stabilized. There will be no major election in any country in the world, or in any major country in the world during 2023. We've had the Xi-Biden meeting during G20 in Bali recently. Xi Jinping will probably go to the US for the first time in a long period at the end of the year for the APEC forum. So this is also something very positive. So basically four reasons behind a very high level of more positive sentiment towards China and towards equity markets in China.
No, that's great to hear, and it's been a rough year, so it's always nice to hear that we've got some positive sentiment. Now, Karine, you've been one of the few who's actually been back and forth. You've been over to Europe and back to China quite a lot over the past couple of months and over the last year. Could you describe a little bit how that's changed, and if you notice any differences in tourism, and what's it look like? I mean, if both flow and inflow from to China and from people, I mean, both Chinese nationals and also tourism, how has that looked since the reopening?
Yeah, that's a great question, Massimo. On a personal basis, I'm very happy that I can travel back home to Hong Kong without having to spend weeks in quarantine in a hotel room. So I think there are two different things. So Hong Kong is a bit apart, because Hong Kong has been a place where there have been zero tourists for the last 3 years, and the problem with Hong Kong was actually started before COVID, during the social unrest. Hong Kong is a place which is vibrant, a destination for tourists, and we said tourists don't only think about people going around taking pictures of monuments, but we're talking about shoppers, including especially from mainland China. So the fact that Hong Kong and China now are open for travel across borders, because basically the border had been sealed between Hong Kong and mainland China since March 2020, is of course very important for the local economy in Hong Kong. You also have to take into consideration the fact that Hong Kong is, like, I met for the first time last week a delegation of Australian business people. That was also because there was the Asia Financial Forum, so people are back. It's very important, of course, for Hong Kong and the sentiment. Now, when we talk about China, the question then is not about so much foreign tourists into China, because they are just a very, very small number, but we're talking about a huge amount of Chinese tourists that used to be traveling around the world and also shopping. Before COVID, there was up to 150 or 160 million Chinese tourists a year going around. And for all of us that spend time in the large cities where big shopping centers, shopping activity takes place, we definitely know that these tourists will come back and will mean quite a bit for this. In Asia as well, of course, Southeast Asia, places like Thailand, but also Vietnam, Korean duty frees. There's a lot of things to talk about in terms of investment implications for these sectors. But I will end by saying that right now, actually, China is, in terms of the topic of tourism, is actually much more about domestic tourism. Not everybody realizes maybe, but even when the borders, there was not a question of the borders to overseas being closed, but even within China, traveling around was extremely complicated, because you have to have health codes, you have to run a risk of being caught somewhere and being stuck in a province or in another city and so forth. So now these things is away, and we are approaching as well the Chinese New Year. So we do think that there's going to be much more activities in terms of domestic tourism. That is definitely key to this question.
Great. I mean, I personally didn't know about the issue from a domestic side, so it's always interesting to hear. And that, Dmitry, if you could also touch on a little bit about what Karine mentioned there, but if you could also, I mean, it's been 3 years now that China's been battling with COVID. Restrictions are finally lifted. There are a lot of expectations on the Chinese economy. What can we expect? And then if you could also share your point of view from on the ground.
Indeed, it has been 3 years, and the fact how fast it happened, it's just amazing. It's very abrupt, almost overnight. All the restrictions are gone, PCR testing is gone, lockdowns gone, quarantines, everything is gone. So obviously, we had been expecting that the restrictions would be removed, because they are unsustainable to begin with, but we didn't expect the speed of this, how fast it happened. And obviously, even though, Chinese government, they made this political decision, but the truth is, frankly speaking, it's still, the country wasn't well prepared to do it that fast, because the vaccination rates were not very high, procurement of medicine was behind, and everything. So now, just yesterday, we had the first kind of glimpse of the official mortality of people. They're saying it's more than 60,000. We still think it's a very, very underestimated number, but at least it's something that's coming out from the official sources. Also, we are seeing the estimates by now that approximately close to 70% of all the Chinese population has been infected. And you just think about this, it's close to 1 billion people virtually within 5-6 weeks. So a major pressure point for the healthcare. But healthcare issue side aside, and just focusing on the economy, actually it's looking very good. Just today we received the data from the National Bureau of Statistics in China, and the fourth quarter and December month in terms of economic activity was not that bad. Actually, the GDP growth in the fourth quarter was 2.9%, much higher than expected. It was 1.6% consensus expectations. And if you look at the annual GDP growth in 2022, it was 3%. Still way below the initial target that they communicated in March, 5.5%, but 3% was better than people expected. looking forward in 2023, we think the current consensus, which is around 5%, is probably too conservative. So we think the economy will deliver a more robust growth this year for the reasons that Karine mentioned, and you know, some other reasons that I'll talk a little bit about later. So, and we've seen that many analysts and economists have been increasing their estimates to, you know, 5.5%, 5.6% growth rate.
Dmitry, if this 5% is conservative, as you mentioned, right? I mean, what are some of the sectors we can expect to benefit from the reopening, from monetary policies, or from various stimulus packages? I mean, because if we are going to reach this 5 or 5+% growth, I mean, they're going to need to help a little bit, right?
Well, there is a lot of sectors actually that are in a good position to benefit this year. I will start with the most obvious one, the consumption. Consumption has been under pressure in China for since the COVID started. I think this year the retail sales actually been very negative territory, slightly negative growth, so which had not happened before. So consumer is going to be the key driver of the economic growth this year. So many, I looked at a number of estimates, but it's very reasonable to assume that consumption spending will increase by high single-digit numbers. So which would be very, very good. Chinese consumer, he or she's in a good shape. The unemployment rate is not very high, 5.5%. The excess savings is very substantial within the system, and then consumers, they couldn't spend because of all these restrictions that were in place. I know some people in Shanghai, they haven't traveled anywhere even within China over the past 3 years, just because it's been so complicated. Every city has their own rules. Some city has some quarantine requirements before you enter, and you never know how your vacation could end up. So I think this removal of these uncertainties and restrictions actually unleashes some significant consumer spending. Also, property market, it was a drag this year. There was a number of policies implemented in 2021, end of 2021, which now China is essentially backpedaling from. So they're aggressively supporting the property sector. So this year, properties and sectors related to properties, they are going to have substantial improvements in the performance. So within our portfolio, we are not heavy on the property. We only have one property stock, kind of consolidator, but we have invested quite a lot in the sectors that are likely to benefit from property recovery, such as home appliances, for example, inexpensive stocks, high free cash flow generations, and now more visible growth for them. Not only this, if you look at the offshore China, obviously internet was under pressure, not just because of the COVID restrictions, but also because of the regulation as well. So this is the sector has been recovering, but I think there is also a way to go. And then just lastly, economically sensitive stocks, within financials or materials, they didn't perform well over the past 2.5 years for the reasons that we just talked, and they're also in a good position to deliver outsized returns given pretty much undemanding valuations.
Very, very interesting to hear that, Dmitry. You touched a little bit on risk there, and I'd like to move to Karine here. Investing in emerging markets, there are always risks, right, that are entailed. Could you discuss a little bit what are some of the other risks that we might encounter, especially with China and moving forward?
Yeah, I think it's always a wise thing to do, especially when you have a very bullish sentiment, to try to consider what could go wrong, but then specifically related to China and early 2023, when we're looking at the outlook for the coming year. I think we start with COVID, obviously. I mean, as Dmitry mentioned, the amount of people that have been infected and in such a short time is absolutely enormous. I mean, it's even hard to imagine. And there are still risk of, severe disturbance in, for instance, in the short term in some value chains. Also, like right now, we know that the pandemic has hit mostly some of the big cities, but also because of Chinese New Year coming up, we're going to have more people traveling around. There would be, of course, a spike of cases in regions of China where the healthcare system is definitely not ready for that, and there could be some issues. Also, and during the conference I attended last week, we actually had the head of the Chinese CDC, which is basically the Dr. Fauci of China, the former head, sorry. He was mentioning the fact that obviously there could be mutation risk as well, and because of the size of the pandemic. Hopefully, so far we have not seen any sign of it, so we really can just hope that it won't happen. But there are basically a lot of uncertainty still on new waves. Now, if we leave COVID behind and discuss a little bit more about in terms of economy and growth and everything, obviously we're also in an environment where the external demand, I mean, we're talking about risk for global recession for global recession, risk for recession in the US, in Europe, and so forth. This could also, of course, increase the uncertainty for a lot of Chinese companies which are geared for exports, and also leading them to weaker capex and so forth. So one aspect of the risk that we can consider, and then the last part of the risk we consider is related to consumption. I mean, Dmitry made a very strong case for what we believe is the reason why it's extremely interesting right now to get exposure or increase exposure to consumption stocks. But we also know, and this is almost like from the discussions we have with Chinese friends, colleagues, people, we know that the sentiment on the consumption is not that strong. People are, of course, worried. So, and Chinese people tend to be saving saving for bad days. Now they know that bad days could happen. So it's not 100% sure that everybody is going to be starting like spending and on spurging on all kind of things. So there is definitely, it's going to be very interesting to see the numbers coming out of China in terms of retail sales and so forth. I will end by saying that this is actually almost like as well an upside risk, because if consumers do not start consuming at the time when China desperately needs to stimulate consumption and economic growth, what will probably happen is that China will be able to stimulate consumption in a way that few countries still have left within there, both in terms of can afford and have the possibility to do. But it could be anything from consumption vouchers to specific measures targeted at different sectors, cars, housing again, and so forth. So this is going to be definitely a very interesting year.
Great to hear, Karine. You touched on something there that I'd actually like to ask Dmitry about, which I think is very interesting, right? Because when it does come to the consumer, China has been at a different point in the cycle, and this is something that we've mentioned in our outlook, which is a key thesis for us, right? That China does not have the same inflationary pressure and not the same battle with high interest rates. Dmitry, if you were to just touch on this a little bit, what does this mean for investors?
No, but it just adds to the argument that we have been discussing. Essentially, indeed, inflation has not been the issue in China throughout the pandemic, and especially in 2022. So even the most recent numbers, they're quite benign. 1.8, 1.9% inflation in December, and then PPI inflation, which is really important within China context, it has actually been negative. And don't forget, of the previous cycles when we have had high inflation in China, it was mostly driven by the food prices, specifically by vegetables, porks, a big component of the CPI basket in China. So going forward, we have reasons to believe that inflation will stay benign. It probably will elevate from the current level a little bit, but it still will stay within the range targeted by policymakers. So also there are a couple other points I would like to mention here. When you look in China, I think the stimuluses would continue because the economy, it's it's still not on a very firm footing. So they need to ensure that the growth is more sustainable. Very important to watch the official meetings that we have every year in March in Beijing. Normally there they communicate the targets and the fiscal measures targeted to achieve economic performance. So that's something to watch for. Also, when you look at Chinese equities in general, I think also it's not just the economy is growing. Growth in the economic activity obviously provides very favorable backdrop for the earnings growth. So in China this year, you would probably have one of the highest earnings growth among the major countries. Probably mid double-digit growth, maybe even higher. So this is decent growth, which comes along with very undemanding valuations. If you look at the MSCI China A, it's trading below average. The valuation argument can be even more attractive if you look at the equity risk premium in China, because right now the interest rates there not the lowest, but very close to the low levels in China. So the equity risk premium is quite elevated in China, and also the fiscal measures and fiscal stimuluses are very important to watch, and we expect them to continue at least in the first half before the economic recovery reaches the sustainable level. And just one last point, we talked about travels, just my personal experience, because the next week is the Chinese New Year, and I'm right now in China, so I was trying to book some holidays in Hainan Island, which is traditional destination during this time of the year. Very hard to do this. Hotel availability is quite tight, and prices are really high. And I'm not even talking about the airline tickets, which are also quite high.
Well, that just goes to show exactly as Karine mentioned from domestically as well. So you'll have to keep us updated with that. Before we go, I'd just like to mention that we will have Karine here in Europe, who will be on a roadshow available for one-on-one meetings. We'd also like to mention that we will have our senior analyst and renewables expert, Hao Zhang, who will be here after Chinese New Year. If anybody would like to book one-on-one meetings with either of them, please reach out to your investment relations associate or any of us here at East Capital. We are more than happy to help. On that, thank you very much, Karine and Dmitry. Happy Chinese New Year to the both of you. And hope to see you both soon. And thank you very much to everyone else listening in.
Bye.